Hello everyone, welcome to this session. In this session, we'll talk about what is accounting, what are the different types of accounting, and who are the stakeholders for the accounting. So first, let's look at what is an accounting. An accounting is basically a business activity or a finance activity which involves about recording of transactions. So when I say recording of transaction, all the transaction that has a financial impact are recorded under accounting. Now, accounting is a language of it's a business. Okay? So it's a language of business where the business communicates its performance to others, to the stakeholders through a language called accounting. Now, if you look at what are the accounting actually involved? Accounting involved recording of transactions, one, and preparation of various financial statements. Now, the accounting is involved about preparing various financial statements like trading and loss account, profit and loss account, balance sheet, cash flow statements, etc. What are the different? There are some of the different. Let's have a look at some of the different types of accounting. So first, financial accounting. Now, financial accounting talks about the core accounting where the activities are recorded and the various financial statements are prepared. Like financial statements includes profit and loss account, balance sheet, cash flow statements. All these financial statements are actually prepared. So that is financial accounting. Then we have a cost accounting. Basically, cost accounting is where all the cost features, okay, recording of cost like fixed cost, variable cost, are actually recorded over here. And basically, cost accounting is used by the organization to understand and evaluate the fixed cost and variable cost component. Now, other example would be a tax accounting, basically where they account for the providing estimation of taxes, recording of trust transaction, etc. Or very popular one, investment accounting, basically which talks about the accounting which is maintained by the funds like a mutual funds or a hedge fund, where organization records all the accounting of the investment activities like purchase, sale of securities done. So these are some of the types of accounting. Now let's look at what are the objectives of accounting. First, an accounting is a systematic record of financial transactions and events. So basically, it's a systematic. Now, why do we call systematic? Right? It is done with the proper procedure by following following principles of accounting, procedures in accounting, and by applying these principles and procedure, the accounting books are prepared. So that's why we call this as a systematic record. Now, the second main objective of the accounting is to ascertain the profit or loss of the business. Now, accounting by preparing various statements like trading and loss account, which is basically done to calculate what is the gross profit of the organization, or P&L account, which is actually profit and loss account, which is calculated, which is prepared to know what is the net profit of an organization. So basically, to understand what is the profit or loss that is incurred by the business, accountings are prepared. Now, the next most important thing is accounts are also used to understand the financial position. So when I say financial position, accounting informations are used to ascertain various ratios like short-term solvency ratios like liquid ratios, or long-term solvency ratios like debt to equity ratio. So to calculate and calculate various ratios, and also to understand the financial position of an organization, accounting is used. Now, accounting provides critical information to the stakeholders. Now, the stakeholders can be your internal stakeholders, or the stakeholders can be your external stakeholders. And finally, accounting acts as a information system, which basically provides information to the various stakeholders. Now, let's look at stakeholders. Stakeholders are the recipients of accounting information. So, they are the recipients who receive this accounting information. Now, the stakeholders of accounting can be external stakeholders, or it can be an internal stakeholders. Now, who are these external stakeholders? Now, external stakeholders are those who are outside the organization. Now, these stakeholders requires the accounting for various purposes. For example, we have investors. Now, investors want to ascertain or look at what is the performance of different companies before they can choose their company, which company they want to invest in. Or they can be creditors like suppliers in the market who supply the goods or provide services to the firms, and they want to know what is your financial position, because they'll be providing this, they'll be supplying goods or providing services on a credit basis, and they want to know whether the organization will be able to meet the obligations. So the suppliers or creditors are another important external stakeholders who require accounting information. Now, then government or a tax authorities, basically governments want to know, okay, how your company is actually performing, and particularly they want to know, okay, whether you guys, when the companies are actually paying taxes on time, whether the tax which is supposed to pay is correct. So for ascertaining all those things, the government requires the accounting information. Now consumers in the sense, the customers who are actually avail the products and services, they want to know about the accounting information, because they want to know whether the company is performing in the, how is the company is performing in the short term or a long term. Then we add a general public. General public requires the accounting information for, because today's general public can be an investor, prospective investor in the future. And finally, the accounting information is required by research scholars who basically somebody like equity research, or somebody who provides a do a research in the securities. They require the accounting information. Now, these are all some of the examples of stakeholders who are external stakeholders who require the accounting information. Now, let's look at some of the internal stakeholders. So, when I talk about internal stakeholders, first come the owners. Now, owners are the shareholders of the company who actually requires this information. Now, they want to know, means the shareholders want to know how the company is actually performing, how they are expected to perform over in the future. So that is why they require the accounting information. It's a duty of the company to provide this information to the stakeholders on a regular basis. Another important stakeholder is employees. Employees would like to know how the company is performing for their job security. So these are some of the internal stakeholders who requires the accounting information. So to summarize, basically we looked at what is accounting, who are the different, why accounting is required, and who are the internal and external stakeholders for accounting. Thanks for your time.